Assalamualaikum and good afternoon to Madam and all my classmates. We are Group 6 and we are going to presenting our mind map by covering chapter 1, 2 and 3. In this group, we have 5 members including me, Muhammad Imran, Raja Abid Nabil, Nurul Aimi, Khairi Kifli, and the last one is Muhammad Danish Fikri. Alright, I'm going to proceed with my presentation. The chapter 1, investment management. So the definition of investment is we're giving up some resources now, usually money or time, that will gain some positivity in the future. The next one is speculative. The speculative is we involve the higher risk and get more uncertain outcome. And the last one is the gambling. We're betting on uncertain outcome. So they have 4 difference between the investment, speculation and gambling. Coming in the number 1 is their purpose, number 2 time horizon, number 3 time the need of analysis, and the last one the risk and return. So there has a phase of investor life cycle, which is number 1, their cycle is accumulation, number 2 consolidation, and the last one the spending and gifting phases.
Hi, I'm Khairi Kifli. I'm going to talk about investment process. Okay, so the investment process begins with establishing an investment policy or objectives. This requires preparing a written policy or statements that identify the objective and the constraints. The second step is the investment analysis or valuation of securities. This involves analyzing whether a security is overvalued or undervalued by determining its intrinsic values. The third step is the selection of securities. Investor chose the best securities based on the analysis, whether it is overvalued, it should be sold or bought, or whether it is undervalued, securities should be bought or not sold. The final step is the portfolio construction. A portfolio is a collection of different securities which investors usually diversify their investment to reduce their risk by owning multiple various types of assets. For my second point is the investment, risk and return. Risk is the chance that the actual return differs from the expected return, which means there is a possibility of loss. For return is the outcome of an investment, whether it is a profit or loss. Risk and return have a direct relationship, which is high risk associated with the higher return and low risk associated with the lower return. For my last point, I'll be talking about type of investors. There are 3 types of investors. The first is a risk-averse investor, which is a conservative and requires a higher return to compensate for taking higher risk. The second one is the risk-indifferent or risk-neutral investor. It is very moderate and satisfied even if they only get back the principal they invested. And the last one is a risk-taker, which is very aggressive and willing to accept high risk with low return. That's all.
Assalamualaikum and hi, my name is Abid and I'm going to share with you guys about this chapter, which is chapter 2, security market. This chapter has 7 main subtopics and I am going to share with you guys the first 4 and my friend is going to share with you guys the last 3. So the first 4, we start with the type of market. There are 2 types of market. First one is primary market and second one is secondary market. Primary market is where companies issue new shares to raise their money. Secondary market is where investors buy and sell existing shares among themselves, such as on Bursa Malaysia. So we are settled about the types of market. Now we are moving to the second subtopic, which is methods of offering new stock. First one is IPO, initial public offer. Company sells share to public for the first time. That is the meaning. And then the second way is employee share scheme. Shares are offered to employees at a discount. That is the second method. We move to the third method, private placement. Private placement is where shares sold directly to selected institutional investor. And the fourth method is right issue. Right issue is where existing shareholders get their right to buy new shares cheaper. And then the fifth method is bonus issue, free shares given to shareholders. And the last method is seasonal offering, additional shares issued by an already listed company. So we are done with the second subtopic. We move to the third subtopic, which is why company get listed. There are 4 reasons why company get listed. First one, to raise capital for expansion. Second one, to increase investor confidence by meeting Bursa's requirement. Third one, to gain publicity and grow their business. And the fourth one is improve company profile to attract more investors. So the last subtopic is function of Bursa Malaysia. First function of Bursa Malaysia is to provide a safe platform for trading shares. Second one is to create liquidity so investor can buy or sell easily. The third one is to ensure fair and transparent trading. The fourth one is to handle clearing and settlement to reduce risk. And the last function of Bursa Malaysia is to give market information to help investor make decision. I think that is all from me. And then I will pass this segment to my friend about the last 3 subtopic on chapter 2.
Hi, my name is Nurul Aini binti Rosli. So I'll be explaining about the types of transaction. There is 3 types of transaction, which are cash transaction, margin trading, and also contra transaction. Firstly, the cash transaction. The investor has to pay fully cash when they purchase the securities. Next is the margin trading. Investor pays part in cash and borrows the rest from broker. Lastly, contra transaction. Investor buys and sells the shares within the same settlement period, and the shares are sold before the payment is made. Next, types of order. There's 2 types of order, which are market order and also limit order. So what is market order? Market order is an order to buy or sell the stock at the best price or based on the market price. Different to limit order. Limit order is an order to buy or sell stock at the specified price. Lastly, there are 3 regulatory bodies in Malaysia, which are Bursa Malaysia, Securities Commission, and also Stockbroking Company. As for Bursa Malaysia makes sure that the transaction in a good manner, and it provides rules of Bursa securities. Next, so what is Security Commission? Security Commission is a place to register prospectus to issue new shares to the public, where it is responsible to regulate the merger and takeover of the company. Last but not least, Stockbroking Company. So Stockbroking Company will act as a middleman in trading the equity.
Hello, my name is Muhammad Danish Shikri Brosli, and I will proceed with chapter 3, which is mechanism of trading. First is stock market. Stock market is a place where equity fund is raised. Second is Bursa Malaysia. Bursa Malaysia is an exchange holding company. Third is trade security on Bursa Malaysia, such as common stock, preferred stock, and warrant. Then there is stockbroking company, which is they dealing with security. Other than that, there is role of broker. Role of broker is to buy or sell on Bursa Malaysia. Furthermore, there is type of stock agent. First is stockbroker, second is remiser, and third is paid dealer representative. Other than that, there is terminologies such as type of order, type of lot, and Bursa Malaysia computer system. Last but not least is trading procedure. First, open an account. Second, agent. That's all from me.